As part of our anniversary special programming, it gives me great pleasure to bring on board Mr. Kumar, Chairman of LIC, to talk about the way forward for LIC. LIC is India's most powerful brand, and they've played the fiduciary duty of keeping crores of Indians safe. But now, will they make lack of Indian investors also rich? How has the migration for LIC been, and how will things change now that India's biggest insurance company is listed? Mr. Kumar, fantastic to have you on ET Now. Thank you for joining us.
Thank you.
How does it feel from being India's biggest non-listed insurance company to become a listed company now? How is the migration?
Migration was very difficult. It was a big change for all of us. A very exciting journey, I would say, for the last 12 to 18 months. And having reached here, I think we feel elated, comfortable. We pulled it off, and we feel very happy about it.
In hindsight, when you look at the stock market performance, do you think you should have not gone public?
Not at all. I mean, people can say the timing was good or bad, but as you know, LIC itself is contrarian investor, so we don't look at the market being good or bad at any point of time. So I think it was a good time, and we did it. But now only time will tell how things shape up. But we're very positive about it.
Markets are nervous about the journey and the transition. The consensus view is that LIC has up until now played more like a social role. Now they will have to play or fulfill the duty towards shareholders, and that migration will come at a cost. That migration means change of mindset. Is this concern a valid concern?
It need not be a concern, because we are very conscious of the fact that this change in getting listed now means that we have a different set of stakeholders, the shareholders being part of the family. But having said that, I think one must appreciate that most of the retail participation has come from our policyholders themselves. In fact, it was a 6 times kind of subscription. So from there, we get this feeling that people trust, the huge trust that the policyholders have. Now, irrespective of whether they are a shareholder, policyholder, or an investor, or anchor investor, or institutional investor, I think we are ready to ensure that we create stakeholder value for everybody. And that is going to be a challenge, and that is, we are working on that.
To create shareholder value, you have to maintain a balance between the policyholder and the shareholder. The shareholder will obviously want more profits, and the policyholder will obviously want more payouts. How would you balance it? Because you cannot make both of them happy.
I mean, this will be true of any industry, especially of a financial sector, I believe. The balancing will be there. I mean, the basic issue will be that how fast we grow, whether it is on the businesses that policyholder like or on businesses that the shareholder likes. Looking at the balancing part, I would say that we will continue to be very strong. We don't want to give up on our strength in par, which is what the policyholders will look for, the par policies. But we will, and we already started working on growing the non-par portfolio in a very big way. And that is something we will do over a period of time, medium term itself, which means that there's no question of balancing. It's a question of delivering value both to the policyholders and to the shareholders.
LIC has also played a role where they had to fulfill social obligations. You were servicing branches which were not profitable. You were coming out with schemes which made a lot of social sense but maybe not commercial sense. Will the mindset now change to complete profitability and high growth?
I think high growth is important. But when you look at the mindset, I think we continue to be India's preferred insurer, which means that that social cause will continue to be there. We are here to serve all Indians, but without giving up on what the stakeholders are looking for. But I think that will continue. I am sure that we have a role to play in the social landscape, and we will continue to do that.
If I compare your market share, north of 50%, versus your profitability, and look at, let's say, SBI Life, I'm using that for comparison, their market share is not even 10%, but profitability is at par with LIC, which means LIC still has a long way to catch up in terms of return ratios. Will you catch up, and how soon will you catch up?
Yes, we will certainly catch up, because the mindset has to change, the transformation has to happen within the organizations in terms of the product mix. in terms of what we are doing with the agency channel, what we are doing with the bank assurance channel, what we are doing with the direct marketing, what we are doing on digital. All that is happening. So we are focused on making those things happen which have not happened earlier. Once we get that right, I believe that we will be able to go very fast in terms and in tune with the private players.
How will the path be mapped? And let's talk about specific ratios here. One ratio which we often refer to in terms of a yard to profitability, a yardstick for profitability is the VNB ratio.
Right.
How do you see that ratio?
We started off with around 9 to 10%. If you look at the pre-bifurcation of fund, it will be around 12%. We would like that to grow in the medium term to 15-16% and eventually catch up and be, we would like to be in class, a kind of insurer with the best VNB margins maybe 10 years from now.
When you say medium term, can I say that in next 3 years your VNB margins would be north of 15%?
3 to 5 years would be probably where we will get to 15%.
How will you achieve that?
We will achieve that by, product mix differentiation, as I said, doing more on the banca, which we have 60,000 outlets with us, and we have not really focused much on that. It's only the last 1 year or so we have done it. There our bank partners are, willing. We recently had a bankers conference where we have given a roadmap of how we want the bank assurance to grow. In terms of that, also it will need a product mix change, come out with more non-par products. We have already launched a product which is only for the bank assurance channel. We have launched a product yesterday for the non-par, a new product yesterday. So going forward, more and more products, and the fact that regulator has also given a lot of leeway in terms of creating new products. At times have been crunched. We have a use and file methodology which we will use very effectively to make that happen. So in terms of digital, again, you are aware that on the renewal basis we have 40-50% premiums coming through the digital channel. What we need to do is to ensure the 13th month persistency with the new business changes that we will bring in terms of products, and the fact that this metric will be tracked more effectively now for the 13th month. That should also change the way we look at returns and the growth and the VNB margins.
What about solvency requirement as the business will grow? Walk us through that.
So solvency is not an issue. Solvency will be, as business grows, more solvency will be required. But I think we are well capitalized as of now. And in the near term, I don't see any reason for us to worry about solvency at all.
Just to clear the air, government has sold less than 5% stake and they are committed not to sell anything in FY23. But FY24, even though prices are down, could there be an overhang of government supply coming back?
Right. Government has already made it clear that for 1 year there will be nothing.
Yeah. So FY23,
that is nothing. So going ahead of that, whether the roadmap will change or whether, based on the act which is given, but at no point will they go below 51% is what the act says. And I think the government will take a view in 23. It's too early for me to say anything of that now.
No, the reason I'm asking this question is because the stock is down and we know that government supply would be constant and that may act as an overhang. Unfortunately, that's been one of the challenges for some of the other government companies like NTPC and Coal India. Irrespective of the underlying price, since government had to raise capital or raise money, they kept on reducing the ownership. Could that be the overhang for LIC in coming months? Not this year, but next year?
Can't say for sure, but we will engage with the government, to ensure that the LIC's interests, the stakeholders' interests are protected for the long term, medium term, before any such decision is taken.
Let me share a channel view with you. And when LIC went public, according to our analysis, it was not priced to perfection. The government and the LIC, they left a lot of money on the table. The pricing was done at less than one time, almost at one time, which was at a deep discount to private players. Yet the stock market response has not been great. What would you blame it on? Not a blame, but why would you say so?
Right. So I believe that market is concerned about a couple of things. Market itself is down because of various external geographical and demographic reasons. But on the LIC stock, I think the concern is mainly around the VNB and the EV that has not been declared. So I would like to tell investors not to worry. I mean, the EV will be declared before the end of June. We'll have to wait for the outcome of that. But then going forward, I would say that people should be wait patiently for a medium term for the stock to recover. And as the markets recover, I think we will see a bounce back as well.
It's quite ironical that LIC is a contra buyer. They always buy when there is value on the table, but the contra buyer for LIC stock is missing.
I think they'll come around soon. I'm hoping they'll come around soon. They will see value.
You've gone on record and you've said that the roadshows for IDBI Bank have started. You've just come back from a roadshow. What's been the response? What's the way forward for your stake in IDBI?
We had roadshows in New York, attended by Secretary Deepam and others as well, government officials as well. I think the interest was very good. Only concern is that the current situation is what they were talking about in terms of the market and the volatility. But there is a lot of interest. And as I've said before, we would like to continue to have some 25% stake in IDBI Bank because it has been a good win-win situation for both the institutions. They have done very well on the banker. In fact, after so many years of bancassurance business, within 2 years, they have become the #1 bancassurance partner for us. And there are a lot of other synergies as well in terms of home loans. And depending on the regulator has given us some time, and we will utilize that time effectively to ensure that these synergies really work for us. And the roadshows are good. I mean, going forward, government has to take a call on when exactly they would like to go ahead with the disinvestment process.
So what will be LIC's association with IDBI Bank once you reduce the stake? Will you have a strategic business relationship with IDBI Bank?
It will be strategic relationship with the bank. Also, we will be an investor, pure investor in the bank as we have investment in so many other entities. But this will be beyond that, and we will have working together on the home loans front, on the insurance marketing front, so that it's profitability both ways, both for the IDBI Bank as for us.
Mr. Kumar, some would argue that your investment in IDBI Bank was an investment maybe not by choice. There was a little bit of compulsion which was at play. And if you invested in a company where by design it was a compulsion which was at play, then why is that you are not looking at selling out your entire ownership in IDBI Bank?
So if you remember, LIC had investment in most banks over the period. In fact, the early 2000, we had a significant stake in Corporation Bank, for example, 30-35%. We had most PSU banks. And at that time, LIC believed that we should have ownership in a bank because it makes sense. We have 2,048 branches. We need to have bank accounts with all of them. It drives the growth both for the bank and for the corporation. We also applied for a banking license a little later on through LIC Housing Finance. That did not happen. So what I'm trying to say is we've always been interested, having bank stake, which will be useful for both entities. Therefore, at the point of when we got this IDBI offer or the opportunity, we took it with both hands. And now that government is willing to disinvest, we continue to state that we would like to continue the partnership, not only in IDBI, we do have in other banks as well. That is something we will continue to have.
LIC, some would argue, has played a role which is not of a bailout agent. It has strategically stepped up and supported financial institutions which were on a verge of collapse. And if that support from LIC would have not come, we could have seen a domino effect when financial markets have gone into trouble. So my next question is that that's a role which you've played over the years. But that time, you were not listed. The minute you get listed and the minute you start playing your role of bailing out or supporting financial institutions, shareholders will ask questions, institutional investors will ask questions, retail investors will ask questions. How would you defend that? Would you see that you will continue to play that role or that role may change now?
No, again, this role has been construed as a bailout kind of role, but I do not believe that. And like I've said earlier also, whenever we have had to help out people, it has been based on sound financial metrics. We go and find out whether there's value in the stock going ahead. And when we see that value, we have an investment committee to go into that. We have a committee on equity investments to go into that. So it is a decision taken after much thought. It is not something that is just done overnight kind of a decision. So once we take the decision, many entities, maybe in the PSU sector or otherwise also have done well. We have continued to be very careful and cautious about investments that we make in such entities without, ensuring that we are not going to give some shock or surprise to either retail investors or otherwise.
LIC, let's talk about the investments of LIC. And we look at LIC as just an insurance company, but I look at LIC as more like a holding company which has got investments which run into crores, debt investment as well as equity investment. In FY23, you booked profits worth 43,000 crore because markets were strong, you were a seller. This year markets are down. Are you investing now or are you still booking profits?
So for a large insurance company like LIC, being a sound investor is important. So sometimes we are seen as an investment company, not an insurance company, you're right. But then that is a very important role that an insurance company has to play in order that long-term funds are secured for policyholders wherever guaranteed benefits are there in place and things like that. But as you rightly said, markets have given us good returns in the last couple of years. During COVID also, initially during COVID, markets were down, we were buyers. And then when things came back, we sold. This year again we are buying because the markets are down. We will continue to be contrarian. But at the end of the day, we will not be able to say how much profit we will be able to make this year or next year. Though last year profits were very good in terms of almost 40,000 crores it made. But we'll have to wait and see. We hope the markets will again correct before the year end.
What is the average you would be investing every year in equity markets?
We last year, I would say almost 1.5 lakh crores was the investment and a profit of 40,000 crores.
And that number is likely to change this year?
It would change, it could change because as we buy more, maybe the amount of buying will go up, but I can't say for sure whether we'll cross last year's figure. It's a question of, every day. Markets keep so volatile. We'll have to wait and see.
But broadly, just to get this number right, because this number will capture a lot of headline. It is coming from India's largest investor. You're looking at investing about 1.5 lakh crore of investments in FY23.
Can't say.
That's a broad park range.
So that is what we've done last year. So, but going forward, how it will pan out, we'll have to wait and see.
Now, debt markets in last couple of years have given great returns. Interest rates have come down, policyholders have benefited, your chunky part is still in government securities. Interest rates are moving higher, inflation has come back. How would you again balance the premium for policyholders when interest rates are moving higher?
So, premium for policyholders is based on the product. So, where the product has a certain premium base, that premium has to be paid. But we have the asset liability matching, which we do on a regular basis to ensure that different buckets of ALM is managed over a period of time. We might be selling, long-term, a 20-25 year kind of a plan. We might be selling some short-term 5-year kind of plan. So, the strategy for the investing on debt for each of this will be slightly different. So, this is something we will take care by the investment of, debt and selling and buying. So, mostly it is buying, and we get into those funds which will give me the returns based on when I need those funds to pay back to the policyholders.
How will FY23 be different from FY22? The reason I'm asking you this question is because you've referred to a product launch, you've referred to the fact that LICs become much more agile, LICs become much more relevant, and LIC is changing culture in terms of adapting with the new world. So
we are having a transformational process within the organization as well. I have been calling it 3.0. And the reason for saying that is, LIC was formed under very difficult circumstances in 1956 when 245 companies were merged. So I call that LIC 1.0, and 2.0 is when the market opened up to the competition. So we did very well during the competition. We could hold our own, and I think we have continued to hold our own for a long time now compared to other geographies. So 3.0 is all about being listed and the transformation that is required within the organization and what we do in terms of products, in terms of training, in terms of investment, in terms of risk management and things like that. So we are ready for that. We have put a lot of processes in place already, and that will work.
Why is that LIC is not really managed to capitalize the impact and the brand value, at least in the bank insurance? If I look at private players, their whole business coming via that channel is much higher than LIC, despite the fact that LIC is a much powerful brand and a reach.
So I would put it like this, that we were very focused on the agency channel, which was providing employment to almost 13.5 lakh agents in the country. We started bancassurance, so in terms of percentage it appears low because a chunky part is coming from the agents. But in terms of volumes, we are there. We're quite almost 3,000, 4,000 crores of businesses coming from the banca. Now, as we scale up this, as I told you, with the differentiated products and with more tie-ups with banks and with more focus on the bancassurance channel, you may not find the percentage changing much, but in terms of volumes, in terms of growth in the banca, it will be substantial.
How much of your new business is coming from the pure digital platform? Because that is one criticism which always has been thrown at LIC, that LIC is an agent-based and network-based organization.
So digital is pretty much inconsequential, I would say. Let me be very frank. But we are working on the platform. We are working on getting new products into that platform. For example, the non-par product we launched yesterday is also available online. Now we need to reach out to customers, our own existing customers, 25 crore customers, upselling to them, asking them also to maybe buy online is something that we are planning, and we are sending out mails and SMSs to all of them. So I think on a period of maybe 6 months to 1 year, we'll be able to show a substantial increase in the digital also.
But over the years, why has LIC been slow in terms of new launches, the new product
No,
launches?
we have been launching quite a number of products last year also. Possibly we will have to ensure that this reaches everybody, every customer, and therefore we have been, trying to enlist. Also, I would like to say on digital that we have tied up with Policy Bazaar as well. They are a broker for us. We are just fine-tuning the infrastructure on IT platforms to talk to each other. Once that is done, maybe in a couple of months, we'll see a lot of buying on that platform also.
I've had the pleasure of tracking LIC for almost 2 decades now, and LIC has had some wonderful leaders. Each chairman has left a different mark and a legacy. How do you want your tenure to be remembered? What is that one mark you would say that, look, that is my whole mark which I have had on LIC as an organization?
I don't know. I would not ascribe any credit to myself in terms of anything, but I believe that at least I and my team, I take my team with me, will be remembered for the IPO, if not anything else.
Do you check the stock price of LIC on a daily basis?
I do that.
If it goes back to 900 soon, will that make you happy, or you'll just be satisfied?
I'll be satisfied. Happiness will be when, it goes beyond a point where investors get, value out of the. But that will take some time.
Is that the contra buyer speaking, or is that the chairman speaking?
Both.
Well, really appreciate your time. So glad you could join us. We've had a very frank chat about where LIC is headed and how things are moving.
Thank you, Nikunj.
Thank you
so
very
much.